Congratulations, you're almost done. You will be receiving or have received the closing disclosure. That's the final document that has all the numbers on it that the government requires we send to you 3 days prior to closing to help make sure you don't have any questions at closing. The problem is it's a little bit of a complicated form, and so I send it to you, and a lot of times people have questions. And so I created this video to help kind of walk you through the closing disclosure and the things that are on it to help you understand it a little bit better. Obviously, I'm not using your numbers here, it's generic numbers, but the concepts are the same. As always, if you have individual questions, give me a call or shoot me a text. I'm happy to answer them, but hopefully this helps. At the very top of page 1, you can see the closing disclosure just has the information about you, the address, the transaction, a date, the sales price, that kind of stuff, right? Below that, you can see the loan terms, okay? So in this example, it shows the loan amount of $357,250, shows you an interest rate of 4.25, and it shows you the total principal and interest payment, okay? This is the payment that never changes. If you're doing a 15-year fixed or a 30-year fixed. If you're doing an ARM, that's a different story. But on a fixed loan, this payment never changes, okay? So every month, that's the same, okay? Below that, though, is the total payment, the full payment. And that part does change, okay? Because that part below, you can see, includes mortgage insurance and then escrow, which is typically taxes and insurance, okay? In this example, there is no mortgage insurance, okay? But you can see it says $186.06 for escrow, okay? So it's just a lump sum. You don't know exactly what the breakdown of that is. If you want to know, turn the page to section G, and you can see it shows homeowners insurance of $44.75 and property taxes of $141.31. Okay, so that's what makes up that $186.06 is your property taxes, your homeowners insurance. Below that then shows you your closing costs. Okay, this is the total costs of the loan. Now it includes costs that I don't necessarily consider hard costs, but it considers your hard costs and your soft costs per se, okay? You can see to the right of this, it says includes $71.98 in loan costs, and then $29.99.78 in other costs. And in this example, there's a $1,300 lender credit too. So let's talk about those. What makes up those numbers, okay? So turn to page 2 again, and you can see in section A, B, and C, it outlines what I consider more the hard costs of the loan, okay? A is our fees, okay? The title fees, appraisal, it's our fees, processing, underwriting, origination, that kind of stuff, right? Below that is the appraisal and credit report, those third-party fees, and then in section C are your title fees, the title insurance, escrow, that kind of stuff, right? Then you can see line D shows you that total of $71.98. So that's how you get the total of those hard costs, okay? Below that, you have other costs. You have recording fees in section E, and then you have prepaids, okay? Prepaids are, you can see the first one is homeowners insurance. So homeowners insurance is required a year up front, okay? Regardless of who you use, that's what they require, is a year up front, okay? So you can see we're collecting 12 months and paying it to State Farm in this example. Below that, line 3 here, it says prepaid interest. Okay, so we're closing 8/15, and you can see, so then there's 15 days of interest from 8/15 to 9/1. That's paid also on the closing disclosure here. Okay, it makes it so your first payment in this example isn't until October 1st, because October 1st is really paying for September's interest, but since you'll own the home in August, August interest has to be paid for, and that's paid for right here, okay? Below that is section G, where it talks about the initial escrow payment at closing. So because you're going to miss 2 months of payments, you can see for both homeowners insurance and taxes, we're collecting at least 3 months, okay? So 3 months for homeowners insurance. It says 12 months. We're going to talk about that in a second. But the reason we're collecting 3 months for homeowners insurance is because 2 months you'll miss, and then they always pad the escrow account by 1 month. Okay. Now, property tax. I just told you 3 months, but it says 12 months there. What's going on, right? So this is a purchase. Okay. So you remember, come November, your taxes are due. Okay. You have to pay those taxes. but you haven't owned the home for the whole year, right? So you're like, why am I paying 12 months of taxes for the whole year? The reason is because we have to make sure that enough money is in there so that when your taxes are due, we can pay those. But if you turn the page to page 3 here now, in section L, line 13, you can see there's a credit from the sellers for $1,049.98. And you can see the dates to the left there. That's for their portion of the year. Okay, so they've owned the house for that portion of the year, so they're actually giving you a credit for the taxes. Okay, so at the end of the day, you're really only collecting about 3 months of taxes too. It just shows a lot higher because it shows that you're paying all of it, and then they're giving you a credit for some of it. Okay. Below that, then you can see section I. You have the $29.99.78. That's your total other costs, which again is prepaids, homeowners insurance, taxes, those kind of things, right? That then you can see in section J gives you your total amount, and in this example there is a lender credit of $1,300, so that offsets the total, bringing it down to that $88.98 in this example. Okay. If we go back to page 1 now, so we just showed you what the closing costs are made up of. Below that then is your cash to close. So your cash to close is the number that you're supposed to bring to closing. And if it's $10,000 and above, you'll actually wire the money. If it's $10,000 and below, you'll actually bring a cashier's check. Okay. You're not bringing in $22,000 plus your closing costs. The $22,000 in this example already includes your closing costs. Okay. So that is the total amount you're bringing to closing. The final 2 page, it's a 5-page disclosure. The final 2 pages just kind of give you some legal stuff. You can read through it. I don't think I need to explain it here. The first 3 pages are the most important. Again, as always, if you have any questions, let me know. But hopefully this at least explains a little bit better what this document is. Thanks.